The billion-dollar question is the worst over for this crypto sell-off, or are we going to be going down once again? Is this currently a dead cat bounce on the daily time frame, and what you should look out for next? So smash the like button, hit the bell notification, and subscribe to the channel. Let's get straight into the show content. There's a lot to talk about. We needed to see the daily close yesterday on Bitcoin to get a whole lot of more information and better form our buys for what is likely to come next. And luckily, we've got that daily close, and there is still some hopium, right? So we'll talk about that in today's show. Again, guys, smash the like button. Let's get straight into it. You can see, of course, on the daily are getting a bit of a rebound after yesterday's panic, the little bit of a flush towards the downside, swinging low and failing, right? So flushing a lot of those stop losses out over there. But if you look at the weekly, still mostly down, right? Still mostly down on the weekly. It's just a question of, are we going any lower? Our bias has been that we are going to be forming a major low anywhere between here and $85,000. 85,000 was the next major level of support, and just below that was about $77,000 to $78,000. So anywhere within that vicinity, we're looking for a macro high low and then continuation of the bull market. But the question is, are we going any lower, or was that it? Was yesterday enough of a flush? Well, we saw around $800 billion worth of liquidations over the 24-hour time period, with the majority, of course, coming from the long traders. And typically, this has been a pretty sizable sell-off. You can look in relation to the prior ones that we had. The last big one that we had was on the 9th of December. That one was absolutely enormous. That one was closer to the $2 billion level, which was a mass liquidation, right? So the question is, have we seen enough? Have we flushed out all of the high leverage traders? Have we flushed out anyone that bought near the top? And does this create the at least opportunity for prices to continue towards the upside? We'll talk about that. It does look possible, right? It does look possible. We have a reset as well in the fear and greed, dropping down to 63. But again, is it enough, right? We haven't even seen neutral on this fear and greed index, but the colors have come down and cooled off a whole lot, which further pushes out how long the cycle could potentially last. We're now trading, of course, back into the 60 to 70 zone. And of course, the expectation is that we should be printing those 90 to 100s, right? The 90 to 100s in order to end off the cycle. That's where we've previously seen. So it is a reset, but is it enough? It would be nice to see a lot more fear come back into the market and not have things rebound that quickly, right? Because if you look at this, 𝗕𝗬𝗕𝗬𝗕𝗓, right? One of the first out the gates over there, just showing you that, of course, if you see things like 𝗕𝗬𝗕𝗬𝗕𝗓 up 35% on the day, then clearly there isn't enough fear, right? There isn't enough fear. So maybe you still will see a bit more fear coming into the market, but that doesn't necessarily always have to happen, right? Remember, we spoke about yesterday the major economic events that are coming up over the course of this week and next week. Basically, for the whole month of January, there's a lot going on. We have the CPI inflation data coming out tomorrow, which is going to heavily affect what Jerome Powell will do going into the next FOMC meeting, with his determination of whether to raise or cut rates or just leave them exactly the same, and whether the Fed will pivot into quantitative easing. On top of that, we also have the Trump inauguration event coming up very, very soon. That actually happens before the FOMC. So all of these moving parts and puzzle pieces need to move together in order for us to figure out best where things may be going next. Now, again, just going back to the actual TA and the others chart over here, you can see you have had a back test over here perfectly into the downsloping trend line. This was your breakout level, at least from the diagonal. This is your horizontal breakout, which has theoretically been deviated and failed. But the fact that you are holding on the diagonal when it comes to the others chart is at least one positive and good sign, right? You are holding there. You're holding above the last week low that we put in, specifically on the others chart on the 16th of December. That was around the point when we put in that $2 billion worth of liquidations, majority coming from the long side. So at least one positive sign that you are holding up over there. And over the coming days and weeks, it will be choppy, but ultimately you're looking for a high low to form over here, and then you're looking for continuation higher. So yesterday, if ever, was going to be the best opportunity to have, if you will call it, a capitulation type candle based on the break below some of those key levels. I know a lot of people are also looking at the head and shoulders formation specifically on Bitcoin, and price at 94K on Bitcoin is basically holding right around the neckline of that invert or the normal head and shoulders pattern over there. But you can only confirm the breakdown with a close below that $90,000 level, that would, of course, send price down towards the 85K lows for Bitcoin. And yesterday would have been the best opportunity for bears to take control and to do that. But so far, we have a swing failure pattern. More on that in just a moment. Now, what we can see over here is if we also look at the inaugurations from the past, what we have historically seen was this, right? This is specifically looking at the others chart, this chart over here, but then measuring it against Bitcoin. Here's your others BTC chart, just quickly highlighting over here some key factors. You can see that we have held this upsloping trend line, and every single time we come into that, we do get major moves within the altcoin sector. And for a long time, we've been looking at some sort of a bottoming formation coming into that zone following when we had the break of structure. So you have lows, you have your first higher high, and now you're looking for the high low, which looked like it could be that candle. You could still be putting in that high low. You might get some sort of a double bottom, come back into that level, and then continuation higher. So I basically want to showcase to you over here that in the greater scheme of things, you definitely haven't missed much. You're not late if you have not been in the market. This is really just the very, very start of where you would expect that others, referring to the altcoin sector, think of this like the some sort of an index or an ETF for the true degen altcoins. That is what your others chart is. And now looking at it on this particular chart, it's measuring the relationship between that chart and how well it's performing against Bitcoin. For the, of course, majority of the bull run, it's been going down because seasonally and historically we've seen Bitcoin outperforms for the first couple of years in a bull run. And then for the final 1 year of the bull run, you see the altcoins outperform. The real question is, are we still going to see that same pattern repeat? Are we going to see the same trajectory play out? Well, leading into the inauguration events back in 2017 and 2021, that was actually the exact point in time where you put in the major low. So we could be closer to that very, very important low for the others against BTC chart than many would like to admit, right? We could be right at that exact point in time. And that's where you start to see the total cryptocurrency market cap rally towards the upside. And then alt BTC charts go absolutely berserk. And that's where you make your millions, right? It comes from the altcoin sector. So we still need to look to Bitcoin because we need to determine that Bitcoin's at least in control and bulls are slowly grinding price upwards, if not in a better case scenario going parabolic. What we don't want to see is that bears are in control and price is falling towards the downside. And we spoke about that a whole lot. We spoke about the pendulum swinging, right? We spoke about that, typically bears have about 2 weeks where they have the opportunity to drop prices lower. And if they fail to do that, the pendulum will swing back into the bulls' favor. And then bulls will get their opportunity to take back control of the market and break prices higher. Now's the bulls' turn, right? So the bears have had their chance. Yesterday was their, I would say, penultimate opportunity to break prices lower. And so far, it's looking like they failed, right? Remember what we have over here on the 5-day chart on the top over there is going to be, of course, the momentum oscillator. That's your stochastic RSI, which really has curled towards the bottom and it's about to turn back towards the upside. That's simultaneously coming off a very, very low volatility. So if it is bulls' turn to attempt to take control, this could be the point in time at which they do it. You also have the same thing over here with Solana, which is one of my top picks for this bull run and one that I continue to want to hold for the long term. And you can see the same thing, right? Stochastic RSI over there, fully reset, coming off of very, very low volatility, which does suggest if you do actually put in a major high low over here, this will be the next move that really gets price sent higher. You have SUI over here, which is also reset on the stochastic RSI, but this one's come off very, very high volatility. And typically it's during the periods of high volatility that you do usually want to do a bit of profit taking. Having also a quick look at Ethereum over here, you can see looking quite similar to Solana. Solana just a bit further along the journey than what ETH is, in the fact that you got its stochastic RSI already bottomed out on Solana, but ETH is still coming down over there. And also you have low volatility on Solana versus Ethereum. But nevertheless, this even for ETH is considered low volatility, right? So overall, basically, when you look at some of these major coins, the major layer ones, you can see there is an opportunity for a high low to be formed over here and a potential bottom, which would be in agreement with what we're seeing over here, which does mean that, maybe the inauguration is not a buy the rumor, sell the news event, but that was already front run. And it could be a buy the rumor event where you do start to see mass appreciation of prices at a later date. Another thing that we can have a look at over here is the MV 𝗕𝗬𝗕𝗓 score, which is something that I commonly like to use with the pi cycle top indicator in determining when there is a major top within the cycle. And the same is true for the bottoming phase of the market using the pi cycle bottom indicator. And long story short, what you can see over here is we have completed phase 1, we've completed phase 2, so bear market lows, cycle mid top, and we've completed phase 3 on the MV/RV score, which is new all-time highs. And the next phases that we're looking at, and this denotes purely to on-chain metrics, thanks to CryptoCon over here for the chart, you are now looking for progression into phase 4, which is your first cycle top and then your ultimate cycle top, right? And I would be looking to take a lot of profit into the first cycle top. As you can see over here, we're currently situated right in that mid-range region, right? This is your mid-range region, and you are looking for continuation just like we saw in the prior cycle. So the bull market hopes are still alive. The bull market is not over. It was just a question of how deep this correction may go. And now the real question is, was that it? Is that it? If so, it wasn't as bad as we thought it was going to be, because the base case would have been a drop down to $85,000. Is $85,000 off the table? Another person who had the $85,000 call was, of course, CZ, right? CZ CZ of Binance over here. You can see he says, well, previously he had put out an 85K potential bottom as well, similar to what I was looking at. And he said, have you ever thought to yourself, I wish I had. I wish I'd bought Bitcoin earlier. I wish I'd bought the dip. I wish I held. I wish I learned about crypto early. I wish I ignored the FUD. But when the opportunity presents itself again, will you act? That is the question mark. And today, he says, is earlier than all the days to come. The days when you start to ask yourself this, right? I wish I had done this, and I wish I had done that. Today's still early. He says, not financial advice, right? So seems like he's looking at this as well, this recent flush, as having been a major bottom. Now, one of the most important charts that we can look at is this chart over here, where we study where the yearly open is in relation to current price action. And this can be done across a broad spectrum of charts, not only Bitcoin. You can look at ETH, Sol, Sui, Cardano, XRP, whatever chart it is that you want to have a look at. You want to see where the yearly open is. What we said is watch for the at least sweep of the yearly open, like we've seen in prior cycles. We did highlight this previously multiple times. We said this is what we saw last year, right? We saw the sweep of the yearly open. We had the power of 3 trade, right? The accumulation or reaccumulation, the manipulation, also known as the shakeout phase, into, of course, the expansion phase, which is the part where price rapidly appreciates towards the upside and you get this massive rally. Now, what I communicated across to both you guys as well as the whale room yesterday was that the question mark always remains with how deep that manipulation phase would be. Could it be that that is it, right? Could it be that that is the manipulation phase and we won't see any deeper? Absolutely, it's possible. It reminds me of another chart that I had a look at a long time ago. This was, we can go to it over here, where I was looking at Chainlink specifically. Let's see, I don't think I have the exact example right now, but we're looking at Chainlink quite a while back in a very, very similar pattern. And it was over here. What we're looking at is Chainlink, and we're looking for the long-term accumulation. This was almost a picture perfect one. There it was, long-term reaccumulation, and then you swept all of those lows. This was the manipulation phase. At the time, I was looking for manipulation phase a lot lower. We're looking towards the left-hand side to where the next major support levels would be. And I think I was looking for something like that, possibly dropping it down towards the lower $3 region, right? So around 320, 330. But instead, what you can see over here was you got a very, very shallow dip. That was your manipulation phase on Chainlink. And then immediately Chainlink started to reclaim the trading range. So this was one of the earliest and first calls ever in the Whale Room Discord. This was when Discord had just begun, at least the Whale Room Discord. And then we started to initiate a long trade pretty much right over here based on the at least evidence before us, which is that you reclaim the trading range. And that is what the rules suggest. When you get the deviation and you break back into the trading range over there, it opens up the long opportunity, irrespective of whether it went as low as you wanted, right? The reason that I'm presenting this opportunity to you is because when you, or at least this example to you, is because when you actually have a look at this particular chart over here, and imagine that this were Bitcoin, it is Chainlink, but imagine it was Bitcoin, right? This would be the equivalent of Bitcoin coming down to, for example, our 78K target. This would be the equivalent of Bitcoin coming down to our 85K target. But instead, where did Bitcoin go? Well, of course, only a little bit lower. It dropped to around $88,000, which essentially means that could be it, right? That absolutely could be it. You could be reclaiming the trading range over here and now gearing up for the expansion zone, right? The expansion phase of the market cycle. And again, just let's quickly go back to Chainlink to just show you exactly what actually came next. That was it, right? That was what came next. Our next target was to $20, and that was where we took the majority of our profits off the table following that trade, right? There it was. So accumulation or reaccumulation leading into the manipulation phase, reclaim the trading range, and you go for expansion towards the upside over there. In this instance, it went to 22. I took all my profits at $20, right? So now you're looking at something similar. This one is Chainlink, just as an example for you. There's your yearly open. It doesn't matter which coin you look at. Most of them will be hanging narrowly just below that yearly open over there. And the second that it reclaims that yearly open, you may be initiating the power of 3 trade, right? So I'm trying to help you out over here with a couple of levels. When it comes to Bitcoin, my target based on this power of 3, as well as my minimum bull market target, I'm not one to put out targets, but this is the most sensible level that I'd be targeting on Bitcoin is $120,000. So from current price over here, you'd be looking at about a 25% move. On other coins like Ethereum, you may see a lot more. On Solana, you'll probably see closer to the 80 to 100% move before hitting what I'm labeling as the minimum target, right? So what we've seen over here is we've seen a sweep of the lows, right? We've seen a sweep of the lows. That could be it. That could be the end of it. We could also come back towards some of this wick over here to fulfill it. Remember, when you look at these wicks over here, as I've labeled on the chart over there, I've said 50% of the wick. That would be the level that I would target. This is essentially when you see an abnormally large wick like that at a very, very critical key point within the market cycle. We refer to this as an inefficiency. So you measure from the low to the at least body of the wick over there, so the entire lower portion of the wick, and we measure out where is the 50% level of that wick. It's currently $91,723. So if you see continued chop leading into the CPI inflation data coming out tomorrow, something like this, you know, that could be an opportunity. Now, as the title of the show suggests, it's not over until you see the signal, right? What is the signal? The signal would be that when price, or if price does come down into this low region over here and you start to see a high-low form, there's some key factors that you're looking for. That being volume, right? You do want to see volume coming back into the market. Where's my little volume chart over here? Have I lost it? There it is. There's the volume chart. We'll touch on that in just a moment, but that is what you're looking for, right? You want to see a high-low form, possibly into the 50% of the wick over there. So expect that there could be a little bit of chop, even if you do start to get a V-shaped recovery. Same story. You want to see the volume increase with price, because the majority of, this move over here, the final portion of this move, let's just highlight it, did occur when price was putting in bearish divergence on the weekly timeframes. So was the stock market, and you were in low volume, declining volume, and therefore it failed, right? Failed, dropped all the way down. This could be that manipulation phase. Reclaim the trading range over there, which you already have. You've run the stops. You've had the swing failure pattern. Why is it a swing failure pattern? A swing failure pattern simply suggests that bears are attempting to swing price lower towards those lower targets, but bulls took control, price closed back above, and that was a failed swing failure, right? Failed swing failure pattern over there. Reclaim the yearly open, which you're above right now, and then you're looking for high prices. So based on everything that I've presented to you, you can do the same analysis basically on the majority of these coins over here. Here's Ethereum. You can see perfect sweep of liquidity down below that $3,000 mark. We did actually speak about this a whole lot yesterday, as well as throughout the week. We spoke about Ethereum specifically, where the majority of those people are going to get liquidated between $2,800 and $2,900, which means you are looking for market makers to send price into that zone and liquidate them. That has essentially happened, and that's part of the reason why we saw the liquidations on the last 24 hours pretty high, right? So now you're still waiting to reclaim the yearly open over there. That would be coming at a 3,335. If that occurs with rising volume in the market, pull out your chart. If you see the volume increasing as that occurs, that starts to become a positive sign, right? This is also the original breakdown level. So if you view this as a little bit of an order block over there that started to initiate that early breakdown, you want to reclaim those order blocks, which is again above 3,335. And coincidentally, that is also your yearly open. That would be your sign of strength specifically for Ethereum. If you look at Solana, here's Solana over there, dropping the yearly open. Yearly opens coming in at $189. Same story, right? You want to reclaim that order block that led to the breakdown, because there is always a possibility that bears are still in control, right? If they were in control, you'd start to see price rejecting and deviating, holding below the yearly open. Maybe you see something like that. It takes time. You come back into 50% of the wick over there, which would for Solana be around that $177 to $78 region. But alternatively, if they can't do that, you might actually still lead to another move towards the downside. I'll show you another viewpoint specifically for Solana to showcase, why maybe that's it. Similar to Bitcoin, that could be the swing failure pattern. Solana just hasn't yet reclaimed the yearly open. So when we look at the volume, and what I've done is I've specifically looked at the volume. If you look all the way to the left-hand side, that was actually the wick low that occurred at $49,000. That was when you had a high volume over here. This was in a Wyckoff accumulation. It was the spring phase. And you can see that is where your major points of control has been for at least from that point in time, from the bottom to the top of the move. The majority of the volume came in at that $60,000 region. And the next highest volume that came in was around this $97,000 region, which is essentially where prices failed. So bulls have a lot of work to do to break above this high volume profile, which is why I say when you start to see the swing failure pattern at least potentially move towards the upside, and you possibly put in that high low over here, then you want to see this volume trending back up, right? We want to see the volume rise. If you do see that, that will be a positive sign. That will show you that this could really be bulls that are taking control of the market, and things maybe, just maybe, will play out like we previously have seen around that inauguration date, where alt BTC pairs start to outperform and new confidence comes back into the market, right? So some key points to look at over there. Remember, the lower regions over here, which I have also spoken about, are so often missed. The key obvious areas, 85,780. Where did price go to? Let's just highlight on that exact wick. Price went down to, there it is, $89,000 specifically over here on Coinbase. So $89,000, missing that key point over there, that key level. But nevertheless, you do have also a bull moon, which is printed right on cue. So dump into the bull moon, and now possible control could be taken from the bulls, and you might start to see prices move higher. Don't get this wrong. At the end of the day, this is still a downtrend. If you simply switch over here from at least if you switch from normal candles onto a line chart, which eliminates the wicks over here, what you are seeing is a series of lower lows and lower highs, right? According to this chart, the bears would be in control. But of course, as traders, we must look at the wicks as well, because that gives us the clues. When at critical points, you start to see big wicks like this forming, it shows that that intraday candle, although was very, very bearish at one point in time, and bears had the chance to send it down to the lowest support, bulls did take back control. Maybe some of those bears close their trades early, front running the major support levels to look to buy back in, showing that they're short-term bearish but longer-term bullish, and they want to jump back into the market. And that's where you see those big wicks form. Price moves back towards the upside. Now you're looking to start to reclaim some of those key levels, which if bulls can get above 95,133, well, that will turn the relative strength index back towards the upside. And then we have that chance, right? That chance for bulls to take over again. So I know there's a lot of moving parts. I understand for anyone new over here, that might be incredibly frustrating, because we've spoken about how price could go up and how price could also go down. It depends on the various different levels over there. But you have to understand, at the end of the day, this is exactly what trading is about, especially when you are in these no trade zones, which we spoke about. Essentially, this has all been a no trade zone until you got above a certain level, or until you hit the next key level of support. Everything in between those two levels was the no trade zone, right? And we're looking for a lot more at least accuracy in determining where price will go next. We need a lot better and stronger signals, right? And we would see that if we start to see now the high lows forming and we start to see the volume coming in, that will be the first of those major signals. On the 4-hour time frame, you can see it's mostly just been range bound, which is part of how we were looking for that manipulation phase down into the yellow box, which we had previously drawn. So you swept that range low, reclaimed over here. You definitely don't want to come back down and hold below this level. Otherwise, it will start to look like major distribution. Otherwise, you buy support and you sell resistance. And theoretically, in the low time frames, that was your major support. However, you do have major resistance now also coming in between the 50 and 200 EMA. And really, you can only start to say that this picture begins to shift when you actually see bulls send price up higher and break all the way above this $102,000 mark, which is what led to the major breakdown. That would, of course, mean a lot higher prices from current levels. If you measure this out, you'd be looking at least almost another 9 to 10% higher on Bitcoin. But structurally, price will be in a much better position to at least get sent higher. So following a type of move like that, if we hypothetically were to put that in, there you go, push up into above that level, above the breakdown level, above 102, you will get a high low, right? Nothing ever really goes up in a straight line like that. You will get some sort of a throwback, probably back into the $99,000 to $100,000 level, which means if you're a super conservative person out there and you're very fearful about losing money, well, a better approach for you may be to wait for something like this. What does that mean for you? It means that if you're not in the market right now, essentially you would be buying about 4 to 5% higher, which is where the likely higher low forms following the confirmation of the trend reversal, right? You want to see the 4-hour, the daily, etc., all in an uptrend with higher highs and higher lows. Otherwise, expect that this range will just continue to range and prices will continue to chop, right? Which is what we've seen. So just to be clear, just to line that all up over there. Now, there is support that suggests that you could see prices spike up higher. And that is, of course, the liquidation levels, which are now at least what was previously on the bottom, has been taken. That liquidity has been taken around that sub $89,000 level. And it spiked all the way to the top now, where at 96,379, you have around $3 million worth of liquidations. Now, that's not a huge amount. The market is uncertain. Not too many people have placed new trades back into the market, but that is where the strongest liquidity lies on a 1-week look-back period, right? So that's one thing to look at. Also, what I do want to mention is that, remember, seasonally, everything is following exactly according to plan. We are following the purple trajectory. And this is why I say you always have to control your risk, because if you look at what occurred in the orange cycle over here, which was, of course, the 2017 cycle, you can see prices went down quite a lot, right? So if we look from the top over there, prices went all the way down for a couple of weeks into day 802, which means, you know, Bitcoin, if it follows that cycle, could still bring a lot more drawdown. The wick is looking promising, right? The wick is looking very promising. I'd personally be looking at that as more than likely going to have been a swing failure pattern and continuation up following just a little bit more chop. So you're looking again for that move into the 50% level of the wick. Now, again, we want to see the volume come back into the market. Very important. The 7-day daily exchange volume, the moving average that we're using over here, is still in a downtrend. It's simple, right? Lower lows and lower highs. It's downtrending. It's lackluster. There's no interest in the market. Maybe around that inauguration event, some new interest will come back into the market. For all we know, they'll pivot into a much more loose monetary policy regime. They'll go into quantitative easing, and we'll see everything play out just like 2017 and 2021. But until then, you know, you do need to manage your risk. You do need to be careful. Don't lose money. The name of the game is not losing money. Also, we have seen with the USDT dominance, this range hold for quite a long period of time. Again, just zooming out over here, let's maybe go into the daily time frame to give you perspective. Remember, every single major top was called on Bitcoin based on when the USDT dominance spiked up, right? Why would the dominance spike up? It means because people are fearful and they're moving out of crypto into the stable coin, that being USDT, also known as Tether, right? So every major on the white dotted line that's running down the screen over here, every single time you touch this trend line over here, that was a major top, or even a cycle top in some instances. So this is a key point. It's a key level. We're looking at it on a low time frame. We're monitoring it on the 4-hour time frame since you know, we're at that key point right now, live and in action. And this has mostly been range bound. You've had a couple of attempted breakouts, 1, 2, 3, 4. And can you believe it? The 5th one. I was almost convinced that this one was going to backtest into the resistance level, flipping it into support and rally towards the upside. But yet again, bulls' hopes have been kept alive with the possibility that maybe, just maybe, this is a swing failure pattern. So in alignment with Bitcoin, when this goes up, Bitcoin goes down. When this goes down, Bitcoin goes up. Why is that relevant? Again, going back to our original chart over here with the swing failure pattern, I mentioned that your optimal time, if you wanted to get long in the market, you now have something to work with, right? Remember, getting long in the market means you have to have a validation and an invalidation. Now you have an invalidation to work with, which would be the bottom of that wick. So let's assume you were looking to get long right over there on that exact wick, and your stop is going to be, hovering slightly below this wick over here. You don't want to break below yesterday's candle low, and you can at the very least trade it to the top of the trading range, already giving you a very favorable 3.5 to 1 risk to reward ratio, meaning for every $1 you're risking on this trade, you would essentially be getting $3.50, or every $1,000, you'll be getting $3,500 as a reward. And if you take that to the ultimate target over there, that changes to a massive 6.84 to 1 risk to reward ratio, which means for every $1,000 that you risk, you're getting $6,800 profit, right? So now, if we are planning to take a trade like this, the reason that it's important, and let's move it back next to the USDT dominance, is because you can see over here, if you do, and I would imagine that at the very, very least, you probably would get one more spike up, right? If you do get a spike up and you start to again fail, putting in a lower high, that spike up into this region over here. So wherever that little move up goes, into that region likely coincides with Bitcoin dipping down to fill that 50% level at about 91,100, right? That's the level that you're looking for. Then you're looking for the high low. Now you have a trade opportunity. Stops go below that wick, enter somewhere within this region. Of course, monitor it on a lower time frame to get your trade in, and then you're looking to run this as an expansion towards the upside, right? Big move towards the upside. So that's what we're looking at over there. Again, if this does lead into, a lower high and then drops leads into a high, I should rather say, test this as support and then moves up, well, then expect the other lower targets are back on the table. Bitcoin at that point will violate yesterday's wick low, and then it will probably lead into some sort of a capitulation, minor capitulation. I don't want to say capitulation in the sense that we're dropping 50% or anything like that, but you probably play out a 40% drop from the ultimate top down to the lows, which I think we measured would be in that mid to high $70,000 region, right? So that's what you'd be looking at in that instance. I know that it's sometimes repetitive and boring to look at these charts, but this is actually probably one of the most important charts that you should be looking at in crypto right now. So this is trading, very frustrating, breaks above 1, 2, 3, 4, 5 times and fails. And the question is this time really going to go all the way back down to the bottom? If it does, that will be really, really good for crypto. Okay, moving on over here, we can look at the BTC dominance as well, which is also giving a bit of mixed signals. The reason it's giving mixed signals is because, of course, it started to look like a massive breakdown. That was good, right? We have the highs, we set in the lower high, but the problem is now we have the lows and we have a high low. So it's pretty much anyone's guess where things are going. You're kind of forming this symmetrical triangle over here, as the Bitcoin dominance will likely attempt to make a decision and a big either breakout or breakdown coming right into the apex of that triangle. So only time will tell. We'll continue to monitor this. Basically, you do not want to see any closing candles above 58.91% on the Bitcoin dominance, because usually when Bitcoin dominance is rising, that would start to look like a W formation, which would most likely only occur in the event of a massive risk-off environment, right? We don't want to see that if you're bullish, right? If you're bearish, you do want to see that. If you're bullish, what you want to see is you want to see this somehow turn over and come back down, and altcoins begin to rally. So I think a lot of the answers can also be found in the DXY, that being the dollar index over here. We've been focused on this for quite some time. It's had a massive run up over here. It's caught right at that 0.618 to 65 level right now. This could be a potential reversal zone, but we don't have enough information yet to determine that. If it does continue up, the next level of interest is your 0.786 fib level, and that's coming in at 111.55. So watch this closely alongside the USDT dominance. I think you'll get a lot of information and answers as to what comes next. Now, let's continue. Stock market. We have to talk about the stock market, which also had a similar drop. Of course, Bitcoin is completely correlated to what's occurring in the stock market, and it's because of the bearish divergence on the daily time frame and weekly time frame for the stock market that we saw the drawdown within crypto, right? And in actual fact, crypto, or Bitcoin specifically, held up a lot better than what the stock market has. And the reason that I say that is because the stock market has actually fully retraced the Trump pump, right? When Trump, of course, won the election, when they could see that he was pretty much over the line and going to take the election, that's where you saw the stock market begin to rally. It's now given up all of those gains, whereas Bitcoin has not yet given up all the gains. In order for Bitcoin to give up all the gains, it would have to drop down, I believe it's somewhere into the mid $60,000 region to give up essentially the Trump pump, right? So with the stock market over here, look, you do have the opportunity for a major low over here, and you could start to see this rally. We spoke about it yesterday. The ultimate low point that we're looking for, at least for the stock market, for the S&P 500, was 5,622, which, you know, from the low over there was about 3.33% away. Could it be that that's it? Of course, it could be. Could start to reclaim the trading range over here, which currently it's attempting to do, at which point you approach it similarly to Bitcoin. It becomes a swing failure pattern, right? Reclaim the trading range. But real safety, at least in terms of your longs, you can say that you can have a lot more confidence that your trade is more likely to work out on the long side if it can break above the breakdown level over there, that 5,960, right? Okay, same story on the NASDAQ, same story on Dow Jones. Dow Jones basically came directly into support. This one narrowly missed over there. So from the low, it could have gone about 2.4% more towards the downside, and then you would have hit that support. Remember, these 200-day moving averages are also rising. So if you do start to put in a high low over here and price can just hold sideways, those moving averages are slowly going to catch up and reconnect with price. As long as price holds sideways, it will reconnect, which means, you know, that could be the low for the stock market. At the very least, you're looking for a little bit of a relief bounce across the board, crypto and the stock market, before maybe putting in a lower high. And that's what we need to evaluate, you know, next, what may happen after that. So here's Solana closing below the trend line. Came very close to hitting the target. I had a target over here between 160 and 164, and you can see price came down to 169, and demand started to come in. Price moved up. I treat this all super similar to Bitcoin. We did cover that on the last chart. You need to see the reclaim of the yearly open, right? But following the reclaim of the yearly open, you likely get one more sweep back down into about that mid-wick level. So I'm going to clean this up a bit. I'm going to remove this chart over here. There you go. I'm going to remove that over there. That means that you can look for price to revisit about 176 to 177. So possibly on Solana, something like this, sweep back down, put it in the high low over there, and then continuation, right? The market has been very volatile. And again, we have CPI coming up tomorrow. So expect that chop will likely continue. I think it's less likely that you're going to get some sort of a V-shaped recovery today before the CPI results actually come out, which means that over the course of the next 24 to 48 hours, expect a bit more chop, right? Expect a bit more chop through the market. You can see SUI over here, right? So SUI already coming down to full 50% of that wick. This is the question. Will it do it, right? Will it fill that 50% or will it break down? If it does break down, this becomes target one over here at $3.96. And then target two would be $2.90. And I do believe that especially the second target over here, just sub $3, would be a major buying opportunity. But we need to reevaluate if it does actually get to that point. So just quickly highlighting this particular chart over here. Let's just quickly open this up over here. I just want to see in relation to that 50% level, how far exactly is this, right? How far is this? So there we go. Let's just get that in, and 50%. So very close, right? So SUI is very close. Let's just perfect this. There it is. $4.50 would be 50% of that wick. If that level holds, you know, could be your first early warning sign of what the rest of the altcoins are probably going to do. So keep a watchful eye on this. keep an eye out on these things. That's essentially what you have to work with over there. All right, let's continue. What else we have? Injective came all the way near the bottom of the trading range over here. So, if you are a injective holder, not really any reason to have sold yesterday because you're coming into major support. This was my messaging to the whale room. I would cut positions that look like they're going to go much, much lower. But if the rest of the market was coming down and it looks like it's coming directly into support, like injective, there's no point, right? You may as well continue to hold that position because you buy support and sell resistance. Casper putting in a little bit of a move over here, but still very choppy in the middle of no man's land. This, could easily still come down to that 0.097, but closer to the range low, they're not. So closer to support, they're not on that chart over there. Okay, TON also very, very close to support over here. You got your major support on TON coming in about 10% further down. So we spoke about this yesterday. We spoke about how a lot of the altcoins were about 10 to 15% away from hitting their super, super key major support levels. I do believe that as we do progress within the cycle and you see prices, let's just say hypothetically, I actually want to touch on that as well, what could possibly happen next. So if we do see volume returning into the market, this is just our timing cycle chart. Remember, we highlighted this. We've been using this for a long period of time to time a lot of these major bottoms and the length of how long these trading ranges would last before the breakouts, right? So if this is hypothetically going to be a major bottom and you see something like that and the volume starts to increase over here, right? And you continue to rise with that volume, be very, very careful once you take out these all-time highs and you move towards this particular date, that being the 8th of March. This is historically where we've seen a lot of the cycles find at least a bit of resistance, profit taking comes in, and then it becomes, this was my original plan the whole time, something like this, and then a early sell-off in March where you start to go into the sell in May and go away, call it, well, at least the narrative that they have around that. So sell in May and go away, reaccumulate, something like that, at which point, once you start to move up, my point of this whole, at least speech over here, is once you move into this phase over here, I definitely think it's wise to reduce the number of coins that you're allocated to. So if you're currently holding about 100 coins over here, you probably want to drop that down to 5 or 6 coins as you approach this region, right? Around that 120K region, so that it's easier to manage. So that if you're wrong and the market starts to, or if you're right, I shouldn't say if you're wrong, if you're right on the idea that the market's going to find weakness over here and start to roll over, you can much better manage those 5 trades and exit those positions very, very quickly for the next drawdown. And then you can reload into a new portfolio at the bottom for the last leg up into October. So that's the base case. That's what I'm looking at over there. But if you're holding 100 coins into the top and growing, because some people do that, how the hell are you going to cut 100 coins at the top when you suddenly get this massive sell-off, right? So that's something to be wary of and careful of. Okay, let's continue. What else do we have? So we've covered TON over there. Let's scroll through the list. What else have we got? Let's quickly go to Mantra. Mantra also coming back down to about 50% of the wick. So we'll see as well what happens with the US market open today. I think that will be very telling, but I can only assume based on the CPI tomorrow, there'll probably also be a little bit of chop in a range-bound environment that's going to form over there. Okay, let's scroll through the list. Anything worth looking at over here? Let me know in the comments. Let me know in the comments. Brett, I see someone wants Brett. Sure, let's have a look at Brett. Okay, Brett USDT. There it is. All right, so that's Brett. Again, similar to Bitcoin, you have the wick. If you do come back down to about 10 cents over there and you start to put in a little bit of a high low, you see volume rising over there, that will be a good sign. Otherwise, you have to be careful of the lower high. If you do spike up over here, mid-range, watch for the rejection around that 13 cents. And ultimately, that's your range low. Not saying that's going to happen, but this is your ultimate support on Brett. And we did see that on WIF, for example, right? If you look at WIF's trading range, I'll bring it up now. Here's WIF actually. There it is, right? So if you go back to Brett, let's go back to Brett. You might think that there's no way that can happen, but let's go back to WIF. Well, that did happen. That happened on WIF, right? WIF came all the way back down and swept below the bottom of the trading range. And then that becomes a great buy opportunity. So far, we have WIF, dog WIF hat, almost playing out what we're looking for, right? Sweeping that low. Now we just need to see it start to reclaim some of those key levels, get back into the trading range over there. And then you have a bit of an opportunity. Touching on 𝗕𝗬𝗕𝗬𝗕𝗓 over here. So 𝗕𝗬𝗕 is still looking okay. But, you know, if this does break down, it will obviously have a long way to go. That can easily go down to about 1160, which is going to be overall, it's around about your mid-range. So all trading range that you had, that would be considered a full deviation. And then you come back down towards the middle of the trading range over there. So getting back above, I'm going to just mark off the levels. For a lot of these coins, this is where you have a much safer entry, right? If these coins can start to get back above their breakdown levels. So get back above this zone over here. There we have it. 1809 to about, let's call it 1850. Get back above 1850. And then you have a much higher probability long opportunity where you can say, okay, in fact, this has held the range low and it's looking good, right? It's looking like there's an opportunity. But until you see that above 1850 or the last 4 digits for 𝗕𝗬𝗕𝗬𝗕, there is risk, right? There's definite risk over there. Okay. Let's see. Rune is in the same place. Stuart B asking for Rune exactly the same as yesterday. I did cover it yesterday. I'll go to it again, you know, just to not leave you hanging, but it is in the same place. If it will let us, right? You see, if it will let us, maybe the gods have spoken. It was on yesterday's show. Now it doesn't want to come up. Okay. Let's try that again. Let me just, I'll refresh this quickly and we'll attempt that one more time. All right, let's go there. Let's go back to Rune USDT. Okay, I think the gods have spoken. Rune shall not be shown today. Rune shall not be shown. Let's see. What else have we got? There is a massive Ondo unlock coming, and it looks like it's going to fall lower, right? Ondo looks like it's going to go down all the way down to the bottom of the trading range. I know probably Ondo holders don't want to hear that, but 87 cents, right? 87 cents is the next level. 𝗏𝗧, yeah, we can have a look at 𝗏𝗧. 𝗏𝗧 USDT. So all the other ones work. You see, Rune is not meant to be shown today for some reason. Okay, there's 𝗏𝗧. Key level, of course, this is your major support, 0.0264, right? That's your major support. You had your falling wedge, price broke out, came all the way back down. It's been a pretty brutal move, right? Luckily, the majority of us got long all the way at the bottom over here. So, you know, had you taken that trade with us, all the way from the bottom of the falling wedge, you'd still have been up about 79% of there. Okay, 𝗕𝗬𝗕𝗬𝗕, let's go to the AI sector. Yeah, we can have a look at 𝗕𝗬𝗕𝗬𝗕. There it is. Okay, it's actually doing okay. I think they got big market makers behind them, so this coin is relatively stable. I've seen multiple times in, you know, panic, it fails to break down. So, of course, ultimate range low, 0.053. This gets really, really bullish if it gets above 0.086 above the top side of the trading range. And the first signs of that happening is breaking the breakdown level, right, which came in at 7.4. All right, Bonk. Sure, we can have a look at Bonk. Okay, Bonk USDT. There it is, Bonk USDT. Mid-range. It's caught a mid-range. I don't like the way it's hanging around over here. At the end of the day, you know, for a lot of the coins, this has been a massive sell-off. So at the very, very least, look at that, almost 60% from top to the low over there. At the very least, there will be some sort of a mean reversion, right? And then it's just a question, does it lead into a lower high, or was that it? Was that the low? In actual fact, I think even if it were the low, you still probably put in a lower high and then you put in a high low, and then you can say, okay, that's the low, and then the structure breaks and the whole trend shifts, right? But yeah, caught right at the mid-range. You want to hold that 50% level of the trading range, which is currently 2734, right? 2734 is the mid-level of that trading range. For those of you that are looking for a place to trade, maybe you're new, maybe you've never traded before, remember there is a link in the description below to a couple of things. Firstly, you have Bybit over here. They are giving you a massive discount, right? They're giving you 10% off of your trading fees. So if you are trading on Bybit, 10% off your trading fees and up to a $30,000 sign-up bonus. You need to use that link in the description below. And then the other thing that I'll mention is Whale School, right? If you go to that link, scroll to the bottom, click on Whale School. We're taking signups right now. For those of you that would like to join Whale School, if you haven't already, I highly recommend it. I see a lot of common questions that are asked, and I have answered all those questions in Whale School. If you do Whale School, you won't need to answer, or you won't need to ask those questions anymore. So 15 days left to go. Signups are filling up. We're almost already at max capacity. So use the link below, sign up. It's free, right? It's completely free. And then there is the Whale Room Discord, right? The Whale Room Discord is, of course, where I drop all of these things. These are all the swing failure patterns for the various coins that I dropped yesterday for the Whale Room members. You got ETH, you got Solana, you got Sui, which actually hadn't swept the low yet. You got what was this one? Mog, you're looking for a reclaim there as well. Bonk, you're looking for the reclaim. So if you won all of these trades, 𝗕𝗬𝗕𝗘, etc., Dog with Hat, there's a whole lot of them. I drop everything in here and guide you through the market and try educate you as well, right? On drawdowns. Very, very important, guys. You have to understand, manage your risk. You have to manage your risk, right? Once you get to about 20% drawdown, you need 25% profit just to get back to break even. Fast forward to 50% drawdown means you need 100% profit just to get back to break even. What about if you're 90% down? Now you need 900% profit, a 900% trade just to get your money back. This is the importance of capping your losses, right? That's nicely shown on this chart over here. This is the ideal range. You want to cap your losses, within this. In traditional markets, it's about the 1 to 5% level. But I would say in crypto, given we have more volatility, you can probably push the envelope a bit and take it to about 10 to 15% loss, and you can still survive, right? That's the point. All of this is covered in Whale School as well. And I constantly reshare and teach in Whale Room. It's not only me in there. If you do want to join, the link is below for Whale Room and for Whale School. So I think that's it from me, folks. I'll catch all of you on the next one. Let's see how the rest of the day persists. Expect choppy price action. Look for the volume to increase, and maybe the swing failure pattern will hold and the lows in. We'll find out very, very soon. I'll see you all tomorrow. Have a great day, and cheers for now.